Hi there and welcome to this week's edition of Bulls and Bears. Very special episode, Kai, our 50th episode.
Absolutely.
Obviously, Jonathan's away, glamping. He's taken his yacht to an island and now he's glamping over the break. But
I heard some parts are flooded because we got quite a bit of rain. I was driving down, the Pacific Highway yesterday, and oh my God, there's not the best condition for glamping, but
so he may need a yacht to get through the camping yards. So
yes.
But obviously, very, very proud. Obviously, our first ever podcast was very different to this one. For those of you who have joined us recently, I'd highly recommend not going back to that because it was terrible, and we've gradually gotten to a little bit more of a better format, and hopefully we'll continue to improve. But Happy New Year to everyone. I hope everyone had a great Christmas. And 2025, hopefully the year of copper and uranium for me. We've had a pretty sort of disjointed start to the year. But firstly, JT not being here.
The compliance officer.
So, general advice warning. This is thoughts and opinions only. It's not financial advice. Past performance is not a reliable indicator of future performance. Please seek advice from a professional before making any financial decisions. This is all general in nature. Rightio. So, this week, NPC in the media. We pretty much...
Which one?
Ausbiz is sponsored by MPC Markets this week. I think we've done more... I did the call twice. JT did the call and the close. I did the close. You've
Monday,
done. Yeah. So only one day this week we weren't on the call. But happy to support those guys. We do love them. But had Michael Wayne early in the week.
What stocks stuck up? Oh, actually, a couple of our stocks on there.
There's a couple of our stocks on there, but it really, the theme across the whole week was a lot of great companies at really expensive prices. So I was on with Mark Morland today. Junbei had a missed booking or whatever, and so 20 minutes to prepare. But it was on with Mark Morland, and they're obviously Team Invest are pretty. They're pretty. It's got to be at a really good price, and it's got to have 5 years of data, and really high bar to get in for them. Which is fair enough. Everyone does things in different ways, but really high quality companies on the list today, like Aristocrat, Wesfarmers. We had James Hardie, but just everything was just a little bit expensive, and with bond yields rising this week, into the end of last year as well. It's I think one of the stocks you got here for the stock highlights for this week even is Lovisa was down like 12%.
Oh, that was a bit of a surprise, wasn't it?
But that was a bit of a market darling last year, and the heat's starting to come out of some of those. So
you've certainly seen some cracks in the obviously GQG. We'll talk a bit more about that. Star Group. Oh my God.
So but just from a broad sense, before we get to that. Obviously LA, hashtag thoughts and prayers. Yeah. Obviously burning at the moment. There's 20 billion odd in damages expected already. That's come up in the last couple of days. US market was shut Thursday night for ex-President Jimmy Carter's state funeral. There's been some pretty significant damage already in the US, and then we've got jobs tonight, which is the key data. But UK inflation was up. Fed minutes said that nearly all bar one or two of the Fed members was worried about inflation and Trump's policies.
Yeah.
So we were ahead of the game last year. No one was talking about it. We were talking about it, but
was it supposed to be like 8 rate cuts last year?
Oh yeah, well, it depends. I think AMP wanted 25 rate cuts in 12 months, but they were one of the Kramers of the year, the economists there. But everyone's still betting their head against the wall, calling rate cuts here again. But I think we're probably not. I don't think they're pricing in a rate cut in the US now till potentially July now. Like that's largely done.
US is largely done. It would be interesting to see. I mean, like the inflation figures have come off a bit, but I mean, it's right in the band. There's really not that much pressure on either to cut unless something else happens, I think.
Yeah, if you, as a central bank, if you don't have to move, you really shouldn't, to be honest. You want it's about stability. So I think the Fed was really aggressive, and I think there's every chance that they're going to, with Trump coming in and probably doing tariffs, he's trying to get something through where he's already checking that he can do these tariffs via executive order rather than put them through Congress.
Isn't that a dictatorship?
Yeah, no, pretty much. I think him and Elon. We'll get to that later. We've got a bit of a new segment for you, which we're going to alternate with Kramer of the Week, called in light of the celebrity couple names. We're going to call it Trusk. The Trump Musk. And we're going to track some of the absolutely ridiculous calls that both of those idiots are making on Twitter at the moment. So. But a lot will come out of this payrolls tonight, I would imagine. They're expecting, what are they expecting, 150?
55?
Yeah, so, and obviously that unemployment rate's going to be a big one. But Aussie stocks, as we touched on, Star Group, GQG and Lovisa were the laggards this week, right? So.
Oh my God, Star Group. Let's start off with the big one, right?
Yeah. Basically... it looks as though the major players, being the debt holders, are pretty happy to see it go broke so they can pick up the assets 20 cents in the dollar.
Well, yeah, because we were just looking at it, right? Like, so what they've got about $1.2 billion worth of assets on their books, about 300 mil of debt. But the issue is their cash flow, right? So they borrow enough money. In the last 3 months, they burned about 100 mil of that cash. They've only got about 30 left.
Yeah, right.
So it's like, well... I think you're right. I think the debt holders are basically taking the shareholders by the gun and saying, you know what, force you into insolvency. They get their portion back.
Yeah, because shareholders get nothing. So, it's not always about whether something's cheap. It's about where you are in the pecking order if the thing goes under. So, it may be a bit of a lesson. And that was one, I think I had Star Group last year about maybe conservatively 500 times on the call. Yeah. Everyone's going, we should be...
But tangible asset... I've had that argument come up so many times.
Well, but 2 years prior to that, it was like, is Magellan a buy at 40? Is it a buy at 30, 20, 10? It's like, sometimes you've got to kind of just trust that not everything's as transparent as people like to think it is. And... this might be one of these things, because everyone sort of expected private equity to step in and buy this. But if private equity's provided them with the debt, they're purposely not going to step in to buy this because they're going to get a better deal being a debt holder than they are buying it out. So, so that's one of those little sort of lessons where you got to be a little bit careful and manage your risk. But I haven't. What happened with GQG Partners? I haven't.
GQG. Really... I mean, basically everyone's saying that they had a slightly more outflow, so people taking money out of GQG than the last month. But it wasn't a substantial amount. Like it was only a 4% decline compared to November funds, right?
Yeah.
So it's like it's not a huge amount, but obviously
it's only period on period. I think that's exactly. I mean, they had been on an absolute tear. Yeah. So, but again, it's GQG is one about Regal and GQG are our two favourites. Like,
absolutely.
But it doesn't like. These high quality companies are just so overboard and so overvalued now. It's like, well, there comes a point where, I mean, would you pay? If a certain item in the shops becomes popular, like there's a certain point where demand just peters out because the price is too high. I mean, it's economics 101, price elasticity, and we are starting to see a bit of exhaustion, I think, in some of those market favourites. So, I mean, look, Lovisa and GQG, two that would be high on our shopping list if they do come off. We love both of those companies. They're fantastic. Yeah,
I mean, GQG still. I think over the last month, the reason why it fell so much was Adani Group.
Yeah.
That's for those who don't know, Adani Group is basically an Indian infrastructure company. They were on a tear. Right,
yeah.
But then obviously there's a bit of scandal. The founder is a bit corrupt.
In India?
In India?
Yeah, wow.
What a surprise.
That's
so that they had a decent holding in that, and that's basically what everyone's like punishing GQG for, right? So
I mean, I think one of their funds had like a 50% return over a 12-month period.
Yeah.
Like, I mean, they're going well, and I guess you make your first misstep, everyone starts to question whether you. But everyone eventually, like I've been in trading for nearly 30 years. Like you got to, when someone's on a tear, they'll eventually make a mistake because
Yeah.
it's almost impossible not to get cocky. Like,
Yeah, it was an interesting question that Kylie asked me on Ausbiz on the call, and she was like, "Would you rather invest in GQG the share, or would you rather invest in the funds?" Thinking about it actually more, I think investing in their funds is probably more worthwhile than actually their shares.
well, but I mean, but with the inflows, why not do both? Because they are getting good fees and inflows, and obviously you had the likes of. Not Pinnacle, the other one. Platinum, where it was the other way around. They charged like a wounded bull, and their funds were terrible.
Oh, it was underperforming average on 5%. GQG's outperforming by 5% every single year.
But they made quite good money on fees though. That's AMP's business model for the last 40 years has been who cares what the performance is? We've got a captive audience, so. But it's and what happened with Insignia? It's
they had a acquisition proposal from CC Capital, so for $2.9 billion. So for Insignia, they MLC, a lot of the financial services in Australia. Basically a takeover bid from CC Capital at $4.30. That's at a 30% premium. 21% premium from what Bain Capital offered, right?
Yep.
So.
What was the premium? Because I think on average it's around about 30% premium.
I think so. Generally pretty fair on takeover deals. But basically share price went up to $4 because the deal wasn't final. Well, it's not finalised yet, right? It's a non-binding offer.
Yep.
So it's still subjected to due diligence, and it has to be approved by the Foreign Investment Board. But if that goes through, it should be worth about $4.
Well, and I mean, obviously there's been previous interest as well, so someone will come out of the woodwork. So, US stocks this week, pretty wildish ride, really. Like it was up hard early and then it came off, and I think early in the week Tesla was up like 6%. It's ended up down 6%. Nvidia was up heaps, and then came on Jensen at that tech conference, and it's ended up only up 1%. Look, fairly mixed week, realistically. Meta said it was going to forget fact checking, which I think is a pretty smart move with Trump happening, because I mean, basically that system will just break. They'll have to have an entire data center just dedicated to that. And
he can't lose to Elon. Those two are supposed to get in a cage fight, or.
Anyway, I mean, Zuckerberg's nickname should be Carbon because he can copy everyone.
As much as I like Elon, I would bet on Zuck on that fight for sure.
Isn't he? He actually does. He does MMA or something, I think. So anyway, to be honest, it's not a fight I really want to see. Like, it's just two nerds battling it out. I don't know whether it'd be. I think I'd rather watch Jake Paul and Tyson. It'd be more athletic. But and then look, Microsoft as well announced plans $80 billion in building AI data centers. That's going to be our high conviction idea for the high conviction special for Ausbiz. At the end of this month is the next phase of AI investing, essentially. So we're going to look at, obviously we're going to try and have a US tech pick, an Australian tech pick, but also a picks and shovels picks where, the likes of that uranium and copper and the data center thematic as well. So, because I think it's not just the Mag 7 that's going to benefit out of this.
I think it's going to be a really interesting year in terms of AI, right? But there might be some surprises. I think OpenAI. There was a lot of things going on in there last year, with the whole saga of Sam Altman being ousted as the CEO. They were supposed to release GPT-5 at the end of last year. It still hasn't come yet.
Yes.
I think there's been a lot of shift in OpenAI. A lot of the developers and a lot of the talent has gone to Anthropic. Anthropic's another one. So that's what Claude, looking at Perplexity, a lot of the models are based off Claude. So that might be interesting. I don't even know if Anthropic's listed. I
don't believe so.
I don't think so. I think it's a private company.
Yeah. But look, I mean, this is the whole thing. Is we're in such the early stages of this whole thematic. This is the thing. As we saw with the internet, thematic. Like, everyone got way ahead of themselves. Everything got repriced, but most of the big winners out of the internet, basically, well, half of the Mag 7 weren't even around in the tech bubble.
Yeah,
So,
well, it's coming, right? Because, like, again, referencing that frame of view in terms of the comparison to the internet age, all the infrastructure, all the networking gear and all that's pretty much NVIDIA. But coming up, it's like, how is it going to affect society? We can already see the early stages in terms of chatbots, but I think the big thing this year is like agentic AI. So
AI agents.
Yeah, you can. These things can actually go and do things, right? And I think that's where we're going to start seeing some things in society change. There might be new products that come out, and it might be. That's, I think, where the key opportunities lie. Right?
In terms of the internet, like we're at the stage now, probably similar stage where, Google's obviously one of the Mag 7, but like we're still in Netscape, like, or America Online. Like we're still a couple of years away from, what will be the massive software winner out of this whole thematic. I reckon it's probably still in the garage, or hasn't even been thought of yet at this juncture.
Yeah, and it could be something really simple. It's like
look at
Google. It's
Google's simple. Yeah,
Google is a perfect example, right? They came at the right time with the right philosophy, because basically before Google, search was not. It was based off a set site structure.
Yeah.
Whereas for Google, they introduced the concept of search ranking, right? So basically, how do you identify the best site and give that result to the client?
Yeah.
And that's really their mission statement.
And then look at all the massive tech winners that are, like, the iPhone was only 07.
Yeah.
That's 6 years after the tech bubble came and went. The app winners are only, we're talking essentially around about 15 years old. So I got 3 kids older than that. So look, this is don't fear, you haven't missed the boat. Like, that's the whole thing is. Well, Warren Buffett as well. They laughed at him in the tech in 2001. They're going, you passed it. I mean, admittedly, he was still probably 70 then. And he sat in his hands and he waited and he was patient and he's cashed up like at the moment. And then he steps in and buys Apple, and he got a number of really big tech winners, but he got them at cheap prices. So the mistake is having FOMO at record highs, and then potentially something breaking or a 25% pullback or whatever, and then all of a sudden you're panicking and selling where you should be buying, right? And bit of those sliding doors moments. So There is a lot still to come.
Keep your eyes open.
Yeah, keep your eyes open. And look, like I said, if Microsoft's going to spend $80 billion, Trump's already committed $20 billion in next year.
Yeah.
We're essentially, that bricks and mortar, where to fit all these new chips and things in, is going to start to.
Because another interesting thing that I read was one of the chief scientists at OpenAI who left, Ilya, right? Like, he's a bit of a genius, but basically he said for AI model training, it's coming to a peak not because of the compute, because of the amount of data that we have. Like, they've read the whole internet. Like,
yes,
like,
and that as well. Like, I'm reading a book at the moment, Human Plus Machine, which is an AI. It's the best New York Times bestseller. It's really interesting. Where basically they're just saying, well, it's the capacity for companies to actually roll it out, because the big winners will be. Will be a combination of machine and AI, and machine and human being. But the human's doing the more high level jobs.
Yeah.
And then essentially, and getting your staff to use it. And even Salesforce had a big issue with this a year ago. They had all these great features they spent a fortune on, and they had no pickup rate. And they had to actually then go and spend money on focusing on training their customers to use them. So. And there's, people will have fears around being replaced. This book's very pro the fact that it'll likely create more jobs. But really interesting in terms of, this is not going to go as analysts expect. Like, the internet didn't go as analysts expect, and there will be many phases of it. So, all we know is that that infrastructure is going to have to get built out, and. Yep. Resources were cheap, but one thing I did SBS on New Year's Eve, and we did the top winners and losers. But Pro Medicus, Mesoblast was a late winner because it got that FDA approval in the ASX 200, but Pro Medicus was basically the best for the year. MinRes was the worst performer of the year, down 51%. But the resources sector and the energy sector were both the two worst sectors, and technology was up 50 and financials up 22. Tech, I don't see getting hammered because they're in our Aussie tech sector, it's super high quality. The financials will just, that'll just. Well, once the ETF flow pivots, then there's not going to be in a value there's not going to be anyone from a value fund on the bid in any of those things for about 25%. So, and then the ETFs have got to go the other way. So that's 11 cents of every dollar that needs to turn around in CBA. And they're going to be rough to find a bid till about $120, I reckon. So I reckon it'll give back $30 pretty quickly, but. Commodities and FX. So just ignore, for those of you watching the video, just ignore that chart. That's my mistake. A little bit of rust on the coming back. But essentially, coal's been hit a little bit this week. Copper's done very well, up about 7%. And that was just, obviously, copper got hammered into the close of, into the close of the year. But I think what the big point of this week is gold. Despite bond yields going higher and the US dollar being stronger, gold and silver were actually up for the week, which that's super positive price action. So I think that is probably going to be, that's probably a pretty significant sign. Citigroup called it to 3,100 this year, or I'm pretty sure it was Citigroup. But I think people are just coming to terms with, there's the Trump optimism and the Trump trade versus he's starting to say so many ridiculous things on a constant basis that everyone's kind of going, maybe this isn't the greatest thing to happen. He's already blamed the Democrats for the LA wildfires.
Although with a Californian governor or something.
I mean, it's maybe you could possibly tone it down. So, but we will get to that. Crude was there or thereabouts. Bitcoin obviously dropped away. It got up to 102,500.
Even a little bit higher. Early in the week,
and then it's back at 93. That's another Trump trade. So maybe I think the wind's starting to come out of the sails the closer we get to that January 20 inauguration, and then they'll let the lunatics loose running the asylum, I suppose. Uranium was similar to copper. It held ground. It had a big rally last week. So the fact that it held ground is pretty significant. But I think that's on the back of those data center announcements overall. Basically $100 billion in investment.
And there was Kazatomprom. There was some piece out of Kazatomprom as well. In terms of lower productions as well, I think that's what
again, right. So, no, the Kazakhstani government basically, Cameco's got a project over there. And there was questions around whether it was actually approved, so they had to halt mining. So, which when you're mining in a jurisdiction where your direct competitor is the government uranium miner. If I was Cameco, I don't think I'd be bothering. Your competitor can actually literally change the rules to get you to stop the whole production. So, and the Kazakhstani government wants to draw this uranium thing out. So they basically said they will never ever push it into a point of oversupply. They'll do an OPEC style thing. So, because they know that this is Kazakhstan's pretty rich in minerals, but this could be their gravy train for 20 years. If they manage it right. So Australia's the only country dumb enough to sell all of their resources and give tax breaks and then not take anything for the citizens.
We should, like I was saying all the time, we should just do it like the Norwegians.
But we know that this is one of my bugbears, is the Kevin Rudd, when he got voted out, they spent $64 million. So that's the number that on an advertising campaign you've got to spend to oust the government in Australia because we're so idiotically fickle. And we could, BHP and Rio and those guys are 80% foreign owned, and they get charged roughly about 18 to 20% tax rate. So the rest of us don't. So we dig it out of the ground, ship it out. They pay 18% tax. The rest of us are going to pay anywhere up to 48.5 cents in the dollar. and you can only dig it out of the ground once. But smart move. It was well played by the mining lobby, I've got to say. But I mean, Australian, I think we're getting to the point where you've got to take an IQ test to vote, personally, or at least answer 3 questions about the topic before you start, because Norway's now the richest company per capita in the world.
Absolutely.
And you know what? The oil companies threw a tantrum and walked away from the table, but guess what? They came back.
But hey, look, even in the Middle East, like Saudi Arabia, all the media.
Oh, yeah.
At least it belongs in the country,
exactly.
even though it's it's a monarchy.
There was one of the Arab countries. We just overtook them for LNG exports.
Yeah.
But they basically have charged 72 billion in tax, and we've charged 20.
Wow.
So they're charging 2 to 3.5 times what we're in levies, and they're still selling it. And I just don't know why we're basically. The personal tax rate. Anyway, that's a big, long political conversation. But will bond sell off? Well, which is a futures term, which is a bond yield rising. So bonds sell off when yields rise. So that's loomed over. But Greenland is the 51st US state. We are gonna change. So this is the new. It's called Trusk Watch. We've got a picture of Donald here in Greenland, and he's saying it's not even that green.
He's where's his igloo?
Yeah, exactly. So Kramer of the week. We just didn't want to pick on people all the time because it's kind of usually the same candidate. So going to alternate a bit, and what we're going to do just for a bit of fun is so this week.
But do you think it's possible? Like
Greenland?
Yeah. Like is it?
Oh, look, who knows? It's happened before.
Yeah.
But so this week we're going to start taking a bit of a list of stupid things that Elon and Trump say, and then we'll mark it off when they actually achieve them, and we'll see what the ratio is towards the end of the year, because this week alone, so he's going to take over Greenland. Canada, rename the Gulf of Mexico the Gulf of America, which the Mexican president trolled him and said they wanted to rename California Old Mexico, which I thought was pretty clever from her in terms of just leaning into it. Elon said that ran a poll on X saying that should America liberate the UK from its government. What else happened this year? The executive order. So we're going to have to cap it at 5 stupid things a week, right? So we're at the cap already. Let's see if any of those things happen, because Trump also said we'll maybe take Greenland by force, by military force. So look, Greenland, obviously, they did buy Alaska from Russia.
Correct.
And it's not
for about I believe it was like 100. Oh no, it was like 300 million in. Oh sorry, no, not even actually 180 million in today's term.
Oh, really? Yeah. Right. Yeah. Okay. Well, it's a lot of snow.
A lot of bears as well.
I mean, Greenland as well. But Greenland does have a lot of critical minerals.
Yes.
So and gold and uranium and all sorts of stuff like that, and some coppers. So I think Denmark currently. It's a sovereign. Is it sovereign or is it Denmark owns it?
It's still part of the Danish, but they're petitioning to become independent from Denmark.
Right. Okay.
Yes.
So they're probably not exactly. I mean, look. This is not. There is a lot of historical context, precedent for this. So we probably don't laugh at it, but I mean, whether the people, I don't know how many people are even in Greenland, but I just love the megalomaniac nature of it. So look, we're just gonna. So it's called. We toyed with a few names. It was Trelon but we've settled on the Trusk in the celebrity couple sort of theme.
In Trusk we trust.
In Trusk we trust. Yes. Well, we don't trust is the main point. Men are taking away the fact checking is probably a good example of that. So look, there'll be a lot on the radar next week, particularly, and I don't know whether what have we got? We've got 10 days until he's inaugurated. So he's got 10 days to say the stupid things before he's actually on the hook.
Oh, he's got a lot on his plate, to tell you that. Not even just this stuff. He's supposed to sort out the Ukraine war. That's supposed to end in 24 hours.
Yep.
He's supposed to fix the economy.
And peace in the Middle East.
Peace in the Middle East.
Which, you know...
He's going to be a busy man.
He's going to be a busy man. So, and then the Los Angeles fires, etc. So, look, it's going to be... I think when we'll start to see... There was some big volume in the NASDAQ on that day, the big day that it sold off this week, which was rare for this early in the year. Just goes to show you that it must be run by our guys because no one's back at work this early, except for us. But, yeah, it'll be interesting to see... after payrolls, and then obviously Biden's on the way out, whether he does something silly on the way out and tries to set a trap for Trump, you know, whatever. I mean, probably be lucky to know what day it is, to be honest, but we shall see. But yeah, it'll be interesting times, and it will be a massive exercise in seeing the forest for the trees over the next couple of years, because there's going to be a lot said and not a lot done, and you don't want to get caught reacting.
I think there'll be some things done.
Oh no, but in relation to there'll be 10 times more things said than actually done.
Yeah, it's certainly going to be interesting. Like I think like if you have Trump in, it's not going to be boring. Like there is 0% chance it'll be boring.
Well, and as Elon starts to gain a grip on. He's realised what a platform he's now got by pure accident, and the stuff he's suggesting. I mean, look, it's all right to have an opinion, but you know, at some juncture, he's probably going to have to maybe be a touch more responsible. Like it's, you know, I don't know. Either way, he'd probably tell me to F off if he was standing here. But the freedom of speech and all that, but whatever. But basically, we're moving on to Trade of the Week now. John Lynn's Group, it's been a previous, and we've got an ad on it now. It's in our buy zone on our high conviction as it stands. But look, for those of you not watching the video or the vodcast and you're just listening to us, you can go to my Twitter or MPC's Twitter. I did up a map for John Lynn's Group, basically where the areas where they service and the amount of catastrophes that have happened. So conservatively, major damage in their service areas is $220 billion. And they seem to be in all the sweet spots. And the LA wildfires now adds another 20 billion to that. So, but interestingly, and I got this off the US government websites and then overlaid in red circles what the where their spots were. But last year and the year before were the two highest disasters over $1 billion damage number of occurrences. So I think there was like 28 and 25 or something like that. And that, but basically the two highest years of catastrophic damage over $1 billion. So I mean, there was Mexican wildfires that didn't even make, that was $2 billion damage. And then there was a load of storm damage in Seattle, which you don't even hear of. There's been hurricane damage all through the, Mid-East and things as well. So the Florida, obviously, Florida, Texas, and California have stolen the headlines, but they are they're going to have a lot of backlog. Like basically, you don't want to be in reinsurers, that's for damn sure. But and I had James Hardy on the call today, and that's probably another one where they make building materials. So yeah, and I think 2/3 of their revenues the US. So they're going to need a lot of cement and plasterboard and things like that. So and JLG is currently at a really cheap price because of that mispricing from the analysts, where they just expected the catastrophes to continue and flow through to their revenue, and they were a bit overpriced. But look, to get to our trim zone is a 40% win. So, and they look, well, I would imagine they're going to have they have to have backlog. Like they've got relationships with affiliates of some of the bigger Tower Insurance, State, Allstate Insurance, which are the biggest insurers in the US. And they've got major centres in most of the hotspots where all of these, whether you want to get into the climate change thing in terms of why this is happening or whatever, that's irrelevant. The bottom line is they've happened, and there's going to be a backlog of work. Like people need houses and things. So That's like a little sneaky one, and there's a few of our faves that have been smashed over the like Findy, whatever, and Clarity sort of fell in a bit of a hole over in low volumes over Christmas as well. Yep. So we'd probably be adding to those from the high conviction list as well because look, those are it says in the recommendations and basically that these are 5-year picks. They're high conviction over long term. However, you've got a dollar average, but we did trim or sell Findy at $8. It got down to $3.50 or something, or maybe $3.20 or something. Yeah,
that's quite substantial.
And then it's rallied 15% today. But these things they're small companies. They're going to be wild rides. Like you position accordingly. But both will be, that listing in India will be really beneficial for Findy and Clarity. I mean that. Yeah. They're going to go well. They've got no debt. And they've halved, so it probably shouldn't have got to $9.
No, exactly right. The ramp up was also quite spectacular.
So yeah, but I guess the key is you start to dollar average into values. So really no concerns on it overall because we know that they're going to be long term winners. So yeah, I think we had what was JT had an alpha rec out this week as well. So Tamboran, what do you know much about it?
Not too well. We might have to ask JT when he comes back.
Yeah, when he comes back. But that'll be trade of the week next week, I suppose. But JT's taken the reins. Well, JT and Kai have taken the reins of the Alpha now, and you boys are focused on product and things, and we'll a lot more algorithmic and nicely screened picks, I think, coming from this year. So yeah, expect the boys to kick some goals this year. I think so. Far less of my opinion, which didn't do us any favours last year. So yeah, probably pretty short one this week with the boys away, and I'm fairly light duties, but I think we'll have the full crew back next week. You and I are on the road and in the middle of the week, but hopefully we only do 3 Ausbies instead of 6 or 7 next week. But yeah, so Market Outlook is still available, by the way. We had quite a few people inquire about and sign up for that over the break because people got a little bit more time in their hands. But have a look on the socials. That's still available. We are going to release a webinar. I think the webinar portion of that Thursday next week as well. JT and I just a little bit of a video companion to it if you're not into reading because I think we ended up it was 20 odd pages long or more so yeah you'll be able to catch that probably Thursday this week. There'll be a landing page on the socials. So good luck to everyone and safe trading for 2025 and I think it'll be a bumpy old road. The CNN Fear and Greed Index is down in the fear territory again, but that's where it was prior to the new year. What are you bullish or well? We had a little bounce. Yeah, I think we might. But what's your call for? I think we may have even done that at the end of last year, but I think it's going to be a bumpy old road this year. I think we'll still end up, but I think it could be by way of down 20% at one stage and everyone freaking out and then recovering in the back half of the year. But who knows? With Trump.
Oh, exactly right. There's a lot that can happen,
There is a lot that can happen. Yes. So yeah, I reckon. I think Mr. Buffett's ahead of his time as per usual. Just probably not a bad time to be reviewing some of your profitable ones and putting some cash on the sidelines and taking a bit of a rest and making sure. I think we're going to do a fair bit of work on what we want to buy if the market dips and shopping lists and stuff for the clients.
Pro Medicus.
Yeah, I know Pro Medicus. Yeah, but look,
first one to the list.
Yeah, that's probably the first one to the list. But I mean, but that's but for the clients, I think a lot of focus is going to be on what do you want to buy if we do have a pullback, and then probably being we want to be defensive, but still still looking for some decent outperformance. Yeah. But
I mean, a lot of them are on our watch list. So
yeah, absolutely.
If you are looking to having our watch list is pretty useful. So I think
Yeah, absolutely. And they've got the buy zones and they've got the trim zones in there, which is sort of a bit of a unique feature of it. So which does help in the case where you've got, if you had Findy, you've missed out. Thank God, I couldn't believe it when that alert went off at $8. It happened in like 3 days or something. It went, but and look, stuff like I said, best performer last year, Mesoblast. Most of that, it was up 900%. But most of it was in the week and a half leading into Christmas after this FDA approval. So if you miss the boat and don't get out, Drone Shield at $2.20, it's back at 80. There's periods where you need to be mindful of trimming when the market gets carried away, and that adaptive charting really helps you out with that sort of thing. So, but anyway, we're digressing, but welcome back. And hopefully, we'll have a few laughs and make you guys a hell of a lot of money this year with any luck. And we'll speak to you next week.
Thank you, guys.